With massive layoffs in nearly every sector, weakness in manufacturing, car sales, and housing, and the biggest one-month decline in the trade deficit since the financial crisis, the economic picture is not looking good, which might explain why so many billionaires are loading up on gold, including hedge fund manager John Paulson and real estate mogul Sam Zell. Bottom line, now is the time to own gold, which is why the experts at Stansberry Research just stepped forward with a major gold prediction, arguing gold could soar as high as $3,000 by the end of the year, possibly even higher. You can find out why and get instant access to their #1 gold investment today. It's not bullion, an ETF, or a mining stock, but in the past, this gold strategy could have made you nearly 50x your money. Considering how quickly the price of gold has been moving in recent weeks, you don't want to waste any time missing out on the gains these experts believe are in store for this gold stock. To get a copy of his new free report with all the details, simply go to goldmaniareport.com. Again, that's goldmaniareport.com for a free copy of his new report. Hi, this is Daniela Cambone, and welcome back to the Daniela Cambone Show here on Stansberry Research. Well, when my guest was on back in August of 2021, he was already warning us of a coming banking crisis. In fact, that video amassed over 2 million viewers. Well, he's back today. I want to know where he stands now. David Morgan of The Morgan Report. Always good to have you on. Nice to see you, David.
Well, Daniela, it's always a pleasure, but after that hit that we did, I'm always a little nervous to do the next one, but
I know.
And I don't have performance anxiety, but I did put some heavy thought into what we want to talk about today.
Please.
And I didn't want to really parrot some of your other guests that have done exemplary jobs. You do wonderful interviews, but I want to bring out some fresh information.
Yes. Well, that's why when we spoke offline, talking about bringing you back on, I started all my research, all my notes, and I know you always bring a different perspective, and that's why I'm so excited to have you on today, because we are going to talk about banking crisis, but you're going to want to stay tuned for the whole interview, because I'm also going to be asking David his take on central bank digital currencies, and I'm sure there's a tie in between both topics here. But getting back to bail-ins, I mean, tie this in to what we saw with the banking crisis. I mean, they had made bailouts illegal, but that's not what we saw now.
Right. I made a big point about, the next crisis would be a bail-in situation. And we didn't. We had bailouts. And what was so interesting is the Orwellian world that we live in, because Janet Yellen called it a non-bailout bailout. So we're in the world of what I call the 1984 Orwellian, because, in 1984, ignorance is strength, war is peace, and freedom is slavery. So obviously we can have a non-bailout bailout. And the one point I think I really stressed for myself to get on your program is that the thing that I fear the most isn't that they started bailing out certain entities and they went beyond the rule of 250,000 being insured. They're going to make everyone whole. Is the inconsistency of what the government is saying. What they're basically outlining so far, subject to change because they can move on a whim, is that you might get bailed in if you're in a regional bank or a small bank, but you're less likely to get bailed in if you are in a money center bank. Now, that's a little bit of reading between the lines, but that's the way I interpreted the inconsistency of what the Treasury is saying to us and what the Fed is pointing out to us. So it's a failed system, and we are not through the banking crisis. Most banks are insolvent, and a lot of money has been pulled out of the bank reserves, which is what you think is your cash, but as I explained in the bail-in interview, it's really you're an unsecured depositor at the bank, and the bank legally takes it as their money. So coming back full circle, that money seeks the best place it's treated, which means money market funds. So a lot of bank reserves have gone into money market funds because they pay a higher yield, which drains the reserves of the banks even further.
And I think this is an important conversation. I mean, we're in earnings seasons. We're seeing the action from the banks. They're all basically trying to prove a point that they're more stable than their rival. But getting back to your point about how there seems to be more help for the smaller fish than the bigger fish, does that surprise you?
Well, honestly, nothing surprised me because the idea of the same rules, laws, and accountability for everyone went away a long, long time ago in this country. And that's very unfortunate because that's really how you have a very civilized society. I mean, you get the same punishment if you're a senator or you're just a commoner, but that's not how the system works. Is I know you've interviewed Gerald Salenti a few times, and as he says, just us instead of justice. So it doesn't surprise me that they keep bending, changing, modifying, cajoling the rules that we're all supposed to be subject to, and it doesn't work that way in real life.
What's the biggest lesson here, or what should we be doing going forward? Because we're hearing two different things. I mean, you have Yellen, Powell, all these folks on one side saying, "Don't worry, the banking system is safe. You could still trust it." But then you have even Jamie Dimon of J.P. Morgan saying, "No, the repercussions from this crisis will be felt for years on end." I mean, here's the CEO of J.P. Morgan saying this. So where does the truth lie, David?
Well, the truth lies, as I've said so many times, all fiat fails. But I want to make a couple other points. One is a lot of us, and I'm probably one of them, that talked about, central bank digital currencies, and we're going to get in this topic later, and the ability to program the currency. So, for example, if you bought too many hamburgers, you might not be able to get another one. Or you travel too far, your carbon credit's too big, you can't travel for the remainder of the month, or that type of thing. But what I want to point out is that the government of the United States basically shut down the Federal Reserve note reserves of Russia. They made it basically null and void. And that was without a CBDC. I'll also point out in your country that your illustrious leader took on the truckers and made their bank accounts null and void. So you don't necessarily need a programmable currency to cause great, what we call capital controls in the system. Capital control meaning you could say if the money's allowed to leave a jurisdiction, an area, in other words, like the US dollar is only good in the US, in the continental United States, Alaska, and Hawaii. It's not valid anywhere else in the world. I'm not implying that would ever happen. I'm just explaining what a capital control could be. You take on many things. And this is the idea that the banks pretend as if they have the ability to solve the problem, but they really don't. What they have is a failed system that they're putting onto a digital backbone that will be faster, more efficient, cost less for the transaction. But if you put a failed system on a high-speed rails, we'll call it, is that going to solve the main core issue? And the answer is absolutely not. And I suspect that when the transition comes, or the reset, whatever you want to call it, that there will be debt that's forgiven. And that will be interesting to see how that is marketed by the powers that be, or shouldn't be. The unproductive class, the ones that lord over us.
I just want to take a step back before we get into the weeds. What does this say, about the state of regional banks? How vital are regional banks to the ecosystem of the banking system? Because obviously there's a lot of loss of trust at the regional bank level now. So what does this say about the future of regional banks, and do we need them?
Yeah, excellent question. They're absolutely imperative. What you want is an anti-fragile system. You want decentralization, and that's what the main theme of the crypto space is decentralized. So the more control you have in one point, the more likely you have a potential failure. But when you have multiple points, you spread it out, you spread the risk out. So what's the best example, I want to bring this up, was North Dakota State Bank. And you can look it up.
Hmm.
not you, Daniela, but the viewers. And the only state bank that's really functioned well in the United States is from North Dakota. They have a surplus, and there's been, in fact, I know the legislator here in my state that wanted to get a state bank started in this state, and the administrators looked it over and thought it wasn't a good idea. But on a community bank level, that could happen on a complete failure, meaning that if the system went down entirely, and I really doubt that, but if it were as a thought experiment, you could have community banks and you could have someone that's a legit banker that gives out tokens or gold or silver or some script or wooden nickels or a lot of things that went on in the Depression could happen again. Money can be either specie, which is gold and silver, that's money, not currency, or it could be a legal contract. And this is why I like the Ithaca dollars and some of these other things that have happened in communities that have been fed up decide to do on their own. The last thing I think is the most important I can bring up on this topic is Glass-Steagall. I'm not a big fan of Roosevelt, but during the 1930s, during the banking holiday and the crisis and all that ensued after that, there was a law called Glass-Steagall. And in that, there were two types of banks. There were investment banks, which I'll refer to now as gamblers, and there were banks that were what I'll call, mercantile banks that only were allowed to give loans for hard assets, such as farmland, mining, real estate, real productive ideas or buildings, etc. And that was a great backdrop. So if you wanted to gamble your money, you went to an investment bank and you wanted to gamble on, and I'll say invest in a new idea that had promise and maybe get a huge return. But that was separated by Glass-Steagall from, building your church, building the community, all that. And that was disbanded in the Clinton administration. And all banks became gambling casinos. And we're kind of at the end of the game right now.
Like I said, we're in earnings seasons right now. I mean, are you surprised that the banks are not doing worse right now, or do you think we'll see that later on? I mean, I guess the question is, why would anyone park their money in a banking stock right now?
Yeah, I agree. I think that they've got further to fall. I think that, there's a lot of good minds out there that can analyze it. I mean, some banks are better than others. Some are solvent, some are insolvent. And you could, make a case for buying certain banks and maybe they fell with the worst and they are undervalued. But on aggregate, no, I would be definitely away from the banking
Right.
sector entirely. I mean, the people that got hurt in the SVB were the people that owned shares of SVB. It wasn't the depositors.
I want to get to really the crux of our interview here today, David, because the people knew you were coming on, and I had so many emails. Have him help us decipher what this new digital currency monetary authority money is. Basically, to sum up, at the spring meeting of the IMF, the Digital Currency Monetary Authority, which is basically the central banks of central banks, announced their official launch of an international central bank digital currency that, quote, strengthens the monetary sovereignty of participating central banks and complies with the recent crypto assets policy recommendations proposed by the IMF. So this universal monetary unit is legally a money commodity, and it can transact in any legal tender settlement currency and functions like a CBDC to enforce banking regulations and to protect the financial integrity of the international banking system. This is from the press release that was issued. First, your thoughts when you first saw the news about this UMU. What did you think? What did David Morgan think?
Well, I thought that this structure is replicating the current one. In other words, the IMF is the banker's bank, and everyone reports to them. And in the early days, meaning 20 years ago, the reporting of all banks that reported to the IMF reported their assets as gold. They didn't report in foreign exchange. They didn't report in the sovereign debt of another nation. That's been nixed. That's been a long time ago, relatively speaking. I mean, 20 years is nothing in historic terms, but as far as in banking terms, present day, it's 2 decades. So The first thing I want to back up is a little bit, Danny, is because there was a
Yes.
Project Icebreaker, and that was, I'm going to just read a little bit of it here. BIS and the central banks of Israel, Norway, and Sweden have concluded, so they've already accomplished this, Project Icebreaker, which studied potential benefits and challenges of using retail central bank digital currencies in international payments. The bottom line is that they have a hub that can take foreign exchange as, or CBDCs, or you could think of it as foreign exchange in today's world, and transact instantly. In other words, you don't have the problems that we have now in the current SWIFT system. And I certainly understand
Right.
those problems. As being international, I'll get a wire and it's supposed to be here, should be, could be here instantly.
It's awful.
It takes 3 days. And we have a joke, I have to tell it if you don't mind, but the fastest way to
Please.
get a wire through to the other party is to put the money in a suitcase, fly there, and drop it on their desk. Yeah. So coming back to the UMU, I think you read enough. It's obviously that they've got the rails or the hub to make these transactions. That's been proven by this Project Icebreaker that's been fulfilled. And now you have the unit of account itself, the UMU. So just to repeat, and I think emphasize that it's important, that the hierarchy of the unproductive class, the banking elite, the political class that does their bidding is still intact. And they're making sure that the hierarchy remains as it's always been.
Yeah. So my question is, why are they doing this and who is it really benefiting?
Well, it's benefiting them and them alone, in my view. And why they're doing this is because it's impossible to carry on with the system as it stands right now. We're at the end of the Fiat experiment. If you look back to biblical times, there was a jubilee every 50 years. And the reason is usury. You cannot compound interest indefinitely without something going wrong. And this is something that they don't teach you in finance, and I have a degree in finance.
Mm-hmm.
But for an
Mm-hmm.
example, if God gave Jesus, and if you don't believe in God or Jesus, that's fine, just look at it as a metaphor. But if God gave Jesus a penny and it was compounded at 2% a year since the time of Christ's birth, that would now be worth 218 trillion. So obviously you cannot compound for 2,000 plus
No.
years and
Right.
get anywhere. That
Right.
number, by the way, is 6 planet Earths. So the bankers know this. They know when they don't really care about the principle. I don't know how many of your guests have ever said that. And they say, well, what do you mean you don't care about the principle? But they don't. The bankers don't. All they care about is the debt. All they care about is the interest payment. They make up the principle by creating money out of nothing anyway. And now you are in servitude to them because you have to pay the interest on that debt. And when that gets to the end point, which we're at, then something must be done. And what is that something? And that is go into a new system. And what's the new system look like? And I'll repeat myself. It's a failed system going into a more modernized system that allows them to transact faster, more efficiently, track it better, monitor everyone, but it doesn't change anything. They're putting a failed system into a new failed system that just reacts faster.
Oh, okay. So I have a few other questions here. One, let me just take a step back because I want to ask if you think there's anything to the timing of it all. It just seems to me, why is this all coming out now? I mean, we have news that China's ramping up the usage of their central bank digital currency. We have the Fed, the Federal Reserve's Zelle-like instant payment system to go live in July, the Fed Now payment and settlement rail. Why all of this now? Is it because, to your point, that the system has just hit a wall and here we are?
I think so. I think it's whether it is contrived or real, doesn't really matter. The effect is that these banks are failing and they have to have a solution in place, or what, at least what they think will work. And so they could step on the gas if they have control. And a lot of it they don't. They may believe they have controlled demolition. And it may have started that way, because if you look at really what the failures were, you could make an argument that was mostly around the crypto world to make the crypto scene less attractive. And if the crypto scene is less attractive, but the central bank digital currency, where it's regulated, we have it and we'll protect you and we have your best
Right.
interest. All
Right.
that gives them a great segue. Your crypto bad, ours good. Decentralized doesn't work, centralized does, and that type of thing. But regardless of either one of those comments, we're in a situation where they're at the end. The can has been kicked to the end. The can cannot go any further. So that's why we're at the place we're at, in my view.
I found this news item interesting too, David, that Ripple recently disclosed that it's in dialogue with over 20 central banks on the development of a CBDC. So could they do it better? I don't know if you saw that news or have any thoughts on
I
it.
do. In fact, I had it in my notes. I mean, the UK uses Ripple for transactions, not in all of them, but in many of them. And, I don't like to I don't mind controversy, really. I think Ripple is definitely here to stay. And on the UK transaction, that's using Ripple, not XRP, just for clarification. But
Right.
I think I actually made the statement and I made it somewhat off the cuff, but there's thought behind it. I try to be, thoughtful in everything I say. But I said if the banks got in a hurry and they didn't have their project completed, which it looks like they've accelerated or they're there close to it, they could use Ripple that's already, in place, very fast, very efficient, and very accurate accounting to use that system as required to get this thing started if they needed it immediately. And I won't take that back. I mean, that's a possibility. The most of the cryptos, I think, still are very vulnerable because they are not really anything other than a new form of fiat. I mean, if there's nothing backing them, then what is their value? Now, there are cryptos that perform functions like XRP that absolutely have value.
I want to tie this in now and get David Morgan's thoughts on de-dollarization. Everyone's talking about it. Everyone has a thought on it, an opinion on it. The coming of central bank digital currencies. Do you see a tie into de-dollarization with BRIC nations gaining more traction, looking for ways and payments outside of the US dollar? They're dumping their US dollars, you can argue. What is the connection and what's your thesis on de-dollarization?
Well, for monetary history, what we look at is as an Austrian student, and I don't agree with everything in the Austrian school, but most of it is much more realistic than what happens if you get an economics degree from any major university. So the true capital formation isn't money. It's the means of production. It's how much physical wealth you build. So if you're building automobiles and rocket ships and all that stuff, you're making a lot of products. So that shifted from the United Kingdom to America. And what you see is what the gold shift was. And the gold shift went from the UK to America. And America became the biggest productive capacity of the world for several years. And that changed. And now China has the greatest productive capacity. And they have probably more gold than the US, although their official numbers are about 1/4 of what the US claims to have. But the idea is if you're making stuff, that's capital. That's wealth. What I see happening now is that if you go back just a few years and you were going off the dollar standard, you might end up with an early demise. I mean, if you look at what happened with Saddam Hussein, he wanted to go off the dollar. His life ended. Omar Gaddafi, same thing. He had a very rich, best situation for his people, probably almost anywhere. And he wanted to go on to a gold dinar, silver dinar, escape the dollar. He had an early demise. The situation with the petrodollar is we were the protection money or protection agency, the military backup for the Saudis, and we basically reneged on that recently. And so now the Saudis don't have any faith in us. So now what do? So there's been a lot of de-dollarization, as you said, and I don't have to name every country. I don't even know them all. But we're seeing more and more join the BRICS, or at least the BRICS idea, which means the dollar demise is happening. It's going to happen slowly. It's not going to go away, but it is going to go into a new system. And whether, for an example, and I don't believe this will be the case, I'll explain what I think could be the case. But for a quick example, going from the Great Britain to the United States, now it's China. So the yuan becomes the reserve currency of the world because they've got most of the gold and they're producing most of the goods that are required by the rest of the world. And that's a real broad brush. I mean, the U.S. still grows a lot of food, and there's other countries that do. But I want to break it down that far. So what I think will happen is when the new system comes in, I think the only way it could work is to do a debt reduction. And how that would work exactly, I do not know. But it'll be something along the lines that all the countries in the world, really, but we'll just take Europe. All these European countries owe each other money or currency, and they can't pay it. It's impossible. And so if there's some kind of debt resolution, or what the Bible refers to as a jubilee, and they start over, it probably would not absolve consumer debt. So your house loan and your car loan and your student loan and all that would probably still be on the books. But you might end up where there's no debt between, sovereign nation states. And that sounds like a real wacky idea. But if they continue on this broken system and they still owe everybody everything and they have faster transactions, they could have the unintended consequences. Because if you sit there and you can really mitigate your foreign exchange exposure through buying gold and it's instant, think of the run to gold. It would be on steroids because it would be so fast.
Right.
India says, I don't care how much your currency's worth. I want to buy gold. And, it's done in an instant. So there's a lot of things behind this that, in my opinion, have not been thought through by the unproductive class.
Well, let me ask you this. You brought up gold in China, and like you said, they're hoarding gold. I mean, they're releasing figures, but we all anticipate those numbers to be much higher. Could their central bank digital currency be backed by gold? Is that something that they could be planning? I mean, again, these are all these just theories floating around, but could that be a possibility?
Certainly. I mean, in fact, I think it's probable if they launch the new system and it's shunned or not adopted the way they plan, then they could come back with round two and say, okay, we're going to put gold in the mix, or a combination of commodities or something. It's all about trust. The system has lost trust. I mean, anyone that understands the system, which is most of the people on Wall Street, most of the bankers at a certain level or higher, and they really don't have a lot of options, as the late, great Richard Russell used to say, inflate or die. And now they can only inflate so much. I mean, the budget deficit for half a year was $1.2 trillion. So if we double that, we're looking at, over $2 trillion for the U.S. debt just this year. And if you look at how much money is scared and volatile but doesn't know what to do, it's 4.8 million in money market funds. So I'm going to round that up to 5, Danny, if you don't mind, so I can do the math in my head. But if you've got $5 trillion on the sideline, scared money, doesn't know where to go. Do I go into real estate? Do I go into stocks? Do I go into bonds? Do I go into precious metals? What do I do? And you take 1% of that $5 trillion, that's $50 billion. That's 2 times the silver market. The silver market right now is 25 billion, and that's every ounce that's mined plus all recycled silver on an annual basis. Now, do you think the way things are going that at least 1% of that money will find its way into silver? I certainly do.
I would think so. I would absolutely think so. And I guess I'd like to bring up, just to go a little bit more in depth on the price action that we're seeing in gold and silver. And I also want to add that Jim Rickards just put out a great article basically answering the question of, why isn't gold higher now? And he basically outlines all the reasons that it should be and what could be holding it back. But just to get your thoughts, I mean, how much of it is the dollar story now, is still the strength of the US dollar? I mean, what are you seeing on the gold front of why, we've saw it break through 2000, but why can't it just seem to hold that and continue going much higher?
Yeah, a couple things. I want to make a comment and I will answer your question. First of all, if you use the CPI that the government puts out, January 21st, 1980, gold hit a high of 850. In current CPI terms, which is a lie, the CP lie, as Mike Maloney says, it would be $3,300 gold, Danny. And we're just breaking 2,000. Now, why is it? I'm a big believer in the extra pyramid, which is a liquidity squeeze, which is what we're facing now. And what it shows is that the dollar, the US dollar, the reserve currency of the world, is the most trusted place and the most comfortable place for people to be. I mean, most people don't understand precious metals, they don't understand the gold story. So they go to what they believe in. If you go to what foreign countries, 60% of the currency is outside of the United States. And if you're in Venezuela or Argentina or Turkey or some of these other places, you actually have a free market called the black market where you use US currency because you trust that. So the reason the dollar is so strong is because we have the inordinate ability to keep printing without any repercussions until there is one. And secondly, it's the most trusted. And if you want to get really down to the nuts and bolts, the reason it's better than the Argentine peso is because they're printing Argentine pesos at a faster rate per capita than we print dollars per capita, because we're printing against the world and they're printing against the nation state. So that's it in a nutshell. I do think that gold is being held back because of dollar strength, but we're starting to see the run to gold, as I've talked about with you and others. And that was proven or have been vindicated in my view because we saw the biggest move into gold in at least 10 years, World Gold Council said since 1950. And then we've had this first quarter an extreme amount of gold purchased. And this is by the smart money. These are central bankers that are buying it. The public really hasn't come into the market yet. And as I said a moment ago, just think if 1% of those assets went into silver. And if you go back to my era, the 70s and 80s, when I was a youngster, the holding of a lot of people's portfolios were about 5% precious metals. So if I'm right about that 1% going into silver, and certainly a lot will go into gold, but if it got from that 1% to say 2, 3, 4, 5%, I mean, you put a huge price on it, but it hasn't happened yet. And the banks know, and you could say it's manipulated or not. I'm sorry if I'm carrying on, but I want to make the point that there's a way to figure out if the market's manipulated or not. It's called the Sharpe's ratio. I wrote about in the Silver Manifesto when I wrote about manipulation. Is it real or is it not? And what you find out, the Sharpe ratio in the silver market is above the Sharpe's ratio of the Bernie Madoff scam. So if the Bernie Madoff scam had a Sharpe's ratio, I think it's 78. I'm checking my own memory. And the one for silver is higher than that. I mean, if I was in a court of law, I think I could hopefully educate the jury in a manner that would get them to understand that, yeah, the precious metals markets are manipulated.
Want to just get your thoughts on what the Fed will do next. We're speaking ahead of the May meeting. Any feeling as to what they will do? Hike or no hike?
I don't think they'll hike. I think they'll pause. But I wouldn't be that surprised if they did hike. And the reason I say that is they're in obviously a dilemma. We've talked about the whole interview. But to save the dollar, they got to make the dollar the strongest thing available. And the way you make it the strongest thing available is you give a yield that people want to hold dollars. I mean, if we go back to the petrodollar for a minute, I mean, the Arabs really didn't trust the dollar at one point. They wanted gold, but Kissinger went over there and convinced them, no, what you really need is you need us to protect you, and you need to buy dollars and make sure all settlements in dollars. Well, they did that. And that gave the United States the ability to keep printing for another couple of decades. Why? Because all that cash flow, which is just huge, you can only have so many palaces and so many jet airplanes and so many Rolls Royces. So the bulk of that money went into what's called the long-term bond. And then those bonds got rolled over. So the whole debt situation is so onerous right now that all these credit situations where the corporations, individuals, entities, pension plans, all these things that have to roll over their debt are rolling over in a situation where it was 1 or 2, 1.5% into 5%.
Right.
And the credit system is starting to contract. And that's the one thing the Fed doesn't want. Or maybe they do. I know I just spoke out of both sides of my mouth, but you really don't know. Do they want to save the dollar and take us down into a debt liquidation, which could happen? Unlikely in my view. My view is that they will pause and see what happens. They're reactive. They really aren't out in front of, they're really not leaders. And then they'll see what's taking place. And then they'll come back and say, we've got to start lowering interest rates. And if they do that, most people that understand monetary history know that that means we're on to a potential hyperinflation. I don't see a true hyperinflation, but the gold markets will probably, and silver markets, commodities markets will react very favorably.
And I would think that the Fed will revert back to their core and most important mandate, though, David, is to protect the dollar. I know that there's the inflation angle now, and that's been the narrative, but what is the number one mandate of the Fed? Is it not to protect the strength of the U.S. dollar?
It is. They haven't done a good job. In 1913, it was worth 100 pennies, and today it's worth 2 cents. But before it goes to zero, maybe they'll keep it at 2 cents. And in a deflation, it becomes 5 cents, and then it becomes 10 cents. So it's possible. That's the way I lean. And I know I've given both sides, and it depends on the air temperature. I don't change my mind. I'm trying to be funny, but honestly, it is a tough call, because the way I see it, and you're asking me, it could go where they have an idea that they're going to go so far, make it so strong, and then they'll slowly start tapering down and manage to get a soft landing, and all that, as I said before, unintended consequences. The market has a mind of its own. The problem with the Fed is that they're all academics. None of them have ever been in the marketplace like I have sometime I was 16 years old and learned how to invest the old-fashioned way by losing money at times and making mistakes and learning, all this stuff. And I'm not the best investor that ever lived, I'll admit that, but at least I understand markets. But they don't. They're econometrics, and this kind of bothers me in some of my peer groups because they're so satisfied with their ability to predict the future. And it's probability, and it's very accurate at times. But just because it fits their math model doesn't make it permanent. And the best place to look at that for verification is long-term capital management. And they had it down to a science. Everyone on Wall Street wanted to get into their game. And they thought they could predict everything always. And they predicted very well until they couldn't. And when the Russian ruble exploded, they were on the wrong side and took down long-term capital management, which was a systemic risk hitting many other banks, and the Fed had to come in and rescue their mistakes. And that's the mistake of our system, because in our system, if you make a mistake, you have to pay the price, which means your bank fails. But no, they pick and choose who gets to live and who gets to die and who gets solvent and who gets insolvent and who has their bank insured, their deposit insured, and who doesn't. And it's a rigged game, and it's got to stop.
Yeah. And isn't that a power? And isn't that a power? Who gets to live and who gets to die? David, I know we've thrown a lot at all our viewers today. What an incredible conversation, and so brilliantly explained by you. But I know the bigger picture that you've always painted is that, look, we're at a risk, maybe we're already there, of a severe crisis due to the unsustainable debt levels. So to bring it back home and to give the people some tools to be working with, what should we be doing with what we're facing?
Well, one is, I don't want to cause a bank run. It's probably already started, but you want to take a look at your situation. I mean, you want to be as debt-free as possible. You don't want to buy anything that's just a nice something to have. You want to really look at what your needs are and meet those. You want to actually downsize if you can. I've given this out, Danny, to others. And if you've got 2 cars and, one of you is working at home, or, going down to 1 car is least convenient, but it's a liability, not an asset. So there are ways for a lot of people to consolidate and minimize their exposure to the financial system. And that's what I recommend. I wouldn't say, unless you're, in a good place and solvent and your net worth is positive, to go into the precious metals. I mean, that's things that most people, I'd say half the population of our country, really shouldn't or couldn't afford to do. They're much better off buying more food or whatever. I know it sounds radical, but we're living in radical times. And the thing about the food situation is food prices keep continuing to escalate. So if you buy ahead, you actually could mitigate some of the inflationary forces that are upon us in the food supply and a lot of other requirements. I mean, housing and everything else. So, and the other part I think I want to say is being a bit philosophical, which I don't do on your program that often, is the power and the spirit of the human experience is phenomenal. And we all have a value, and that values were priceless. And what we've got to realize is that our own sovereignty, which no one ever talks about, is really key to this whole equation. Don't be afraid to speak truth to power. Don't be afraid to go your own way. And if we, the people, stay honest and have high integrity with each other, I think we could come through this thing better than maybe I've outlined.
Wow, you just gave me goosebumps with that. That's beautiful. And I invite you to be more spiritual like that anytime, David. And I guess this is a bigger question, but everything you're saying is basically like try and lead a simpler life. And how do you practice that? Because I know you're not on Instagram and all this crap, but we're faced with so much commercialization, and you need this, and you must have that, and you have to have this fancy watch and fancy car. And I know that's not the life you lead despite your wealth. So how do you not get distracted and suckered into that vacuum? Is there anything you practice that keeps you focused?
Yeah, I'll answer that. I forget the name of the book. Dan Millman wrote it. And in that book, he talks about happiness, and happiness is being happy with what you have. Now, I understand people are stressing over money because they can't pay their bills, or their mortgage is too high, or they got a balloon payment. I understand all that. But if you were taught to live within your means, you wouldn't be in that position. Of course, still hardships happen. I'm not mitigating that. As far as me personally, yeah, I've been on this path for a long time. And personally, I have a situation that's totally off grid with a greenhouse. And it's very simple. I'm not living there full time right now. But when I do go there, I get such an experience of being in nature, almost a Walden Pond, if you allow me to say that when I come back to the city, it's like, why am I doing this? This is the way, in my opinion, we were actually having a more fulfilling life. But it's a harder life. When I'm in that Montana cabin and I get out of the down comforter that I could afford, and it's 52 degrees, I run right over to that wood stove and start the fire like pronto. But that's what I've done.
I hear you. And thank you so much for sharing that, David. Come back soon. I love talking with you.
Vice versa. Thank you.
And thank you for watching. We'll have more incredible discussions coming your way. So be sure to stay tuned to Daniela Cambone Show and sign up at danielacambone.com so you don't miss a beat. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.